the minister at the New Home Church of Christ. I've known Joseph now for a while, and as I was telling him some time ago, I wanted to be a part of this because this is my son Wayne Jr. And y'all know Wayne's autistic. You can see that. I can pour only so much into him, but I can pour into the new young people. Since I'm 67 years old, I can pour into you and give you the knowledge God's given me. Because as Joseph said, on October the 3rd, I celebrated 14 years clean. And I've gone from the pit to the pulpit. I have my own church. My wife and I have done great financially, and it's all because of what God has done in our lives. And I want to give some of that back. So I was telling Obadiah, and I was saying the same thing to Joseph earlier. They're laying down the foundation of what we talk about in finance. These are the principal things that you must do in order to have a fruitful and productive financial life. You need to have a budget. Yeah, you need to understand the principles that Joseph was talking about as far as how you work your money. You know, Obadiah laid down the structure of a budget and what the importance of a budget, some of the methods in budgeting. Joseph gave us some things that we need to actually do to make our money work for us and not work for our money. Now what I'm going to do is, because of my son, this is how I found out what my net worth was. I didn't know what my net worth was until we went into trust. And I found out about that. So today I'm going to be talking to you about, and can somebody bring up Proverbs 24 and 27, please? I'm still having problems with my eyes, and it's Proverbs 24 and 27. Just read that for me. Go ahead.
Proverbs 24 and 27. Prepare thy work without, and make it fit for thyself in the field, and afterwards build thine house.
What they've done is preparing. Now we're going to go to, now we're going to lay down some more foundation, not the foundation. Now we're going to get the extra stuff that you need to do to take your finances to the next level. Overview. What is life insurance? We'll get into what that is. We're going to talk about wills and trusts and why these financial instruments are so important for the stability of your overall financial health. Next slide. Life insurance. A contract with an insurance company that provides financial payout to beneficiaries after the policyholder's death. Now, as a preacher, I've been doing this for 24 years. And I'm going to tell you right now, we as a people don't have life insurance. And that's I see people fighting. I mean, I've seen all kinds of things occur in the funeral because people want to get, well, Daddy left that to me. How you that? Our debts that are left. You know, the people, you see these, now people think that GoFundMe is an insurance account. It's an insurance policy. Oh, we got a GoFundMe. Well, why didn't you have an insurance policy and you wouldn't have to go begging to everybody? You know, we need to be prepared for these things because guess what? Everybody in this room got one thing in common. We're going to die. Sooner or later, you're going to die. And accepting that and preparing for that is what we need to do. I've never done a white funeral that didn't have insurance. Let me say that again. I've never done a white funeral that didn't have insurance. And I've done many of them. Types of life insurance. I was telling Obadiah. There's term, whole, and universal. Universal. We have the universal policy. I have the universal policy. Term life is insurance, and it's the cheapest to get. Basically, you say, okay, I want a policy that's going to last 20 years, and you'll maybe say $100,000, $120,000, whatever. You just work it out. Well, the way my insurance, our accountant did it with us was, let's look at all your assets. Let's look at all your debts, and let's get your net worth and all that stuff together, and then we'll decide what kind of insurance policy you're going to have. Right now, my wife and I have $500,000 life insurance policy. So I watch her every night when I go to sleep. Oh, come on, that was fun. I said, sleep with one eye open. But whole life insurance, it's lifetime coverage with cash value component. It's more expensive than term, but it does. It's like a savings account. It really is. Now, that I was telling Universal Life. Universal Life is an insurance company. I was just telling Obadiah. I have owned an internet television network. It's called Spirit Broadcasting Network. We got 8 channels, Roku and Amazon Fire, and it's blowing up. I mean, I'm just amazed at this technology and how it works. But sorry,
I was repeating what your network.
But I borrowed against my Universal Life policy to start the network. I'm my own bank. I ain't got to go to the bank with hand in, oh, please give me some, sir. I can borrow against this and be my own bank. So who am I paying back? I'm paying me back. See, this is how you can use these financial instruments. This is what white people have been doing forever. They're their own banks. I have my money, using it to make my financial situation better because I am paying me. I don't pay anybody else. Think about that. You can be your own bank using this type of financial instrument. Next. Okay. So this is going to be a flyover, but this is why life insurance matters. It protects your financial situation. It supports family independence in case of unexpected things that occur. Because guess what? We all are going to die. And if this stuff is set up, guess what? Your family don't have to struggle with that. It leaves a financial gift or inheritance. My daddy died. He left us, each one of us, $25,000. I miss him, but that was pretty nice to come. Debt coverage. All of us gonna leave here with debt. Joseph said something that made me think about this. You sign that paper, and when you die, that debt don't go away. It becomes part of your estate, and somebody's gonna have to pay it. Your loved ones die, you're dead, and they're worried about grieving you and all this, and all of a sudden these creditors don't care that you're dead. They want their money. And if you have insurance, guess what? They don't have to worry about it. My house right now, we have what's called mortgage protection insurance. I die, my wife dies, the house is paid off. We don't have to worry about that. And you know how much easier it is to sleep at night when you have that type of financial security? That 1.4, it's in all my assets and stuff. I couldn't write you no check. It's in all the things that we've done and how we put together this whole financial portfolio. And this is a big part of it. Go ahead, next slide, thank you. All right, wills. What is a will? A legal document outlining how you want your assets distributed after you pass away. That's all it is. Everybody ought to have a will. It's not hard to do. You can go on, Rocket Lawyer, or you can go on, I'll tell you the best place to go actually is, there's a website called Fiverr. I didn't put this in there. Fiverr. It's FIVERR.com. You can find people to do stuff for you for $5-10. I got a guy who does all my work for my television network. I've met him on Fiverr. He lives in Brazil. I pay him $30 a month. You go on Fiverr and find a lawyer probably for $10-15 to make you a will. Legally binding will. No problem. But everybody should have a will. Why? Because it ensures your wishes are followed and avoids conflict among family members. I told you about that. I saw these two sisters fighting, biological sisters, fighting at a funeral. Because they said that the father wanted her to have something. She said, I saw you going in the house, B. And they fighting in the church. It was wild. Because he didn't have a will. You got a will, everything is covered in there. The people know what they're supposed to get. No, you can't argue with my last wishes. Next slide. Okay, there are 3 types of wills. Simple, which is obvious, so you can go on Fiverr and get a will just for yourself. Then there's a living will. If you've ever been in the hospital, they ask you, do you have a living will? What the living will does, it lets your wishes be known to the medical community. Do you want, what do they call it? DNR? Yeah, DNR. Do not resuscitate? Yeah, I should know that. My wife is a doctor. But I don't have a DNR. So you stick tubes in me everywhere you want. Keep me here as long as I can. But then there's a joint will, which of course my wife and I do have as well. And when we put together this thing for Wayne, which I'm about to talk to you about real quickly. But the joint will is where both of you come together and you have wills and you know, express one to the other what you want to have done and that type of thing. That's basically when you're in a marriage. Next slide, please, sir. Why are wills important? Because of it directs who receives your assets, reducing disputes. That's bottom line what I said before. All these fights and all this stuff that occurs, wills can take care of that. Protects loved ones, names guardians if you have minor children. It's an easy process. It simplifies legal proceedings for your family. You don't want to have to deal with a whole lot of legal stuff after somebody's died. Been there, done that. It's never easy. Yes.
So how do you make a will?
Again, there are several ways to do it. One, you can go online and say, give me you can find a blank copy of a will online. Or two, again, go to Fiverr. And you just put in the search bar, you just say, create a will. And they'll give you several people that'll be able to create a will for you. The third way is to go downtown or go through the phone book. Well, so how old I am. Go to Google and just lawyers who make wills, that type of thing. But my thing I would say is you can go online on Rocket Lawyer, and they'll create a will for you. You know, they'll ask you a series of questions, and they'll bring the will out. You know, they'll print it out for you. Boom, boom, boom. But the thing is, you do want to have a lawyer. I'll tell you why. A local lawyer, because somebody is going to have to execute that will. Somebody will be the executor, which was the person that's going to be in charge of all yours. And when you go to fill it out, it'll show you that. Who's the executor? That's the person that when you die, they're going to say, okay, I'm the one that's going to distribute all this stuff. The reading of the will, they'll be the one to distribute everything to everybody. But those are 3 ways that you can do that. Good? Mm-hmm. All right, go ahead. Here's the last thing I want to talk about here, and that's the trust. You say, what is a trust? I didn't have an idea what a trust was 2 years ago. We started working on one for Wayne. Because I knew I'd seen what they call the death tax. And that's another thing I want to bring up real quickly here is that if you have a will, if you have over a certain amount of assets, the state will tax it. They call it the death tax. But some people talk about probate. They will get a portion of your assets. And so they're taxing you even after you die. It's crazy. I don't understand that, but that's what they do. But if you have a trust, can't touch it. MC Hammer can't touch this. That's what a will, a trust will do for you. A trust is a legal entity. It's like a corporation. And what happens is, well, let me go through it. Okay. It's a legal entity that holds assets on behalf of beneficiaries managed by a trustee. Once again, like the executor for a will, the trustee manages the assets in a trust. The purpose it allows the distribution according to specific instructions, often with what I just said about tax benefits, major tax benefits. There are 3 types. I know these, man. Revocable, irrevocable, and special needs. Why? Because we had to go through this with my wife, and I had gone through this, and that's what I was telling Joseph, about 2 years ago. That's when I found out how much I was worth. We hadn't put none of this together. You just been running around. You get to sit down at the lawyers. I'm sitting there at the table. Guy looks at me. He says, "Okay, we got all your assets and liabilities, and then the investments, and this the stocks and stuff." and you 1.475. I'm like, what? I said, who you talking to? I said, my daddy standing behind me or something. We've just been blessed, man. I mean, and now I work on that, like I told you about Quicken and all these things. I am more in tune with our finances now than ever before. To make sure that the money's working for me. I found a bunch of, have you ever seen that commercial where the guy downloads this app and shows this woman she's been paying for all these subscriptions and she didn't realize she was paying for them? I had so much stuff, man, that I didn't realize I was doing. We gotta get our finances together. It's like Joseph was saying, my money was killing me. I was working hard. My money wasn't working for me. Now we'll reverse that. Okay, revocable trust. It can be changed by the trustees. We can move assets in and out, like our house now. I don't own my house anymore. The trust, the Shemwell family trust, owns the house. Because see, my wife and I decided we're gonna die in that house. So why make it so that the kids would lose anything when we pass on? So got the house in there. Now there's irrevocable trust. That's a little bit more difficult to manage because once things are in there, you can't change it. You can't change it. It's locked in. It's done. But the good thing about trust, though, guys, is this: when we die, all of our assets that are in that trust automatically go over to the beneficiaries. Automatically. There's no probate. There's no taxes. It just transfers over to them. Just like that. Because they are active members of the trust. So they just boom. And they once we are gone, though, then they can liquidate the assets if they want to. I'll get on to the special needs trust. This is right for Wayne. And it can be in the revocable trust. It's like corporations can own other corporations. That's what this is like. So the special needs trust is made for Wayne so that, because this is stupid too, that they will, because he's in that trust, if we didn't have a special needs trust, they would say that this is an asset and it would affect his Social Security disability payments. Yeah, but see, this is a game that they've been playing for years that we don't know nothing about. But see, they made the rules. Once I started finding out how to play the game, it's like, oh, this is smooth. Like that without universal life insurance, that's a bank. It is. It's like having your own bank. But anyway, special needs trust for Wayne is owned by the revocable trust, so that won't affect his Social Security benefits. All right, last slide. Next slide. I'm sorry, is that the last slide?
You have a question?
Yeah. Oh, yes, sir.
No, you just answered. I was gonna ask you, how did you keep them?
What did you mean by assets?
Well, my assets are my house, stocks, mutual funds, cash in the bank. Anything that has value that I own is an asset. Car is not an asset. I'm gonna tell y'all that right now. It's not. That's what you call a depreciating asset because it loses value every year. So I'm gonna tell you this right now. I had a guy who was richer than anybody that I've ever known personally. He said he drove an old Oldsmobile. I asked him, I said, Herman, why are you driving an Oldsmobile? He said, I don't drive my money. Cars, you go down in the hood, you see all these people with Mercedes and Cadillacs and all that in front of their house. They don't even own the home. That's insane. That's insane. I'm with Obadiah. I squeeze a nickel to get a dime out of it. You've got to understand what these assets are. But they explain, again, it was the foundational stuff for this thing. That's the stuff that everybody needs to have. You need a budget, and you need to manage your money and work your money. That's it, your money working you. It's Wayne, stop. Get your hand out your shirt. Yes, sir.
Does all this depend on a type of lawyer you have? Like
How do you mean?
Say you make your will and you're putting it on somebody. And then one thing I was confused on what you said earlier was sometimes they'll give you tax, but then there was this one part you said you gotta get an active member. So,
Okay. Well, we're talking about two different things. Okay, you want to get a will. A will does one thing, and it directs how you want your assets, the things that you own, distributed. You know, I mean, we go as far as my mom. She has in there about her rings and all that stuff, and you know, my dad had in there, you know, about who gets how much money out of what accounts and all this stuff. It just directs them where they go. But that, depending on how much you have, I think you got to be having over like $500,000. Then the tax kicks in. If it's under 500,000, you don't have to worry about it. You can just have a simple will and be done, and everything will be distributed. Now, that's why we're not going to Kroger's. That's why we're not going. No, stop. What do you think? Stop. The trust will protect you from any of those. If God bless you, you know, your lives come out great, you become a huge success, you get all this assets and stuff, first thing you want to do is put everything into a trust. Just into a revocable trust, because that will protect you. Because guess what? Once that stuff, your assets and all your houses and all your stuff was in there, something happened and somebody tried to sue you, they can't sue the trust. They can't get your houses and all, because that stuff's not owned by you. It's owned by the trust. That's why you need to know how to play this game, because that's exactly what's been done over and over and over. Obadiah was talking about, you know, getting into real estate. I know businesses that own millions of dollars of property in a trust. The corporation is even in a trust. I mean, they know how to take these financial instruments and use them to their benefit. And we need to start understanding these things, because they can benefit us. You say, well, I don't have a whole lot. It's still beneficial to you to understand. One thing you're going to need is life insurance. Definitely get life insurance at a minimum. Get life insurance. To complete that financial picture, you need life insurance, because we are going to die. I don't have to even guess about that. We're going to die. Yes, sir.
Do you put the things, like, do you put the trust in the will to go to whoever it goes to whenever you die as well? Or
Great question, because yes, you do. When my attorney put together the trust, he also put together two wills, one for me and one for my wife, and then he put together quick claim deed so that we signed the house over into the trust. Yes, the will and all that stuff goes into the trust, because everything is being covered now by that trust.
So the will goes into the trust?
Yes.
Okay.
Yes.
Not the trust into the will. Okay.
Yeah. No, the trust becomes the entity that owns everything.
Okay.
Yeah. Everything goes into that trust. It's just like I said, just like a corporation. Yeah.
Can you transfer real estate to the trust if there's still an outstanding debt?
Oh yeah. My house ain't paid off.
So because I know in some instances with real estate, they have like a repay clause that's triggered whenever the real estate.
That's very good. That's very good, because you know what? That's what my attorney was worried about, as far as because once you transfer their property, is that repay clause triggered? No, it's not. No. I think that you have the states where you have to worry about something like that are Kentucky, Florida, New York, and I think Texas, where there is a problem when you might have to pay a fee or something along those lines. But in Kentucky, because I went to our bank is Fifth Third. I went down to the bank, and he said he did, because our lawyer didn't know. So I went to the bank. I just sat down with the mortgage people, and because I say this was right here. You got questions on the trust, I got you. On the insurance, I can probably get you on that as well. But because I've had to go through this trial by fire over the last couple of years, getting stuff together for Wayne. Life insurance, I am not a life insurance specialist. I would say that you might want to talk to somebody, but I can give you the big picture on life insurance. And again, that mortgage triggering, that payoff isn't triggered by taking a quick claim deed and putting that assets into the trust in the state of Kentucky. You gotta remember that each state has different laws as to how you can form trust and what can be done and what cannot be done. But here right now, because I think the states they're looking at, those states I just named, real estate is valued so much more. So they think, well, you know, you're trying to hide something. So nope, they want to make sure they get their money, but not in Kentucky. You're safe. So why trusts are valuable? Any more questions before I go on? Avoid probate. As I said before, probate is the death tax. You don't want to pay if you're over 500,000. I think that's the rate. It's 500,000. The probate kicks in. Then you want to trust. And you know, it keeps assets and their details private. When you go to probate, do you know that those court proceedings, everything's out there? It becomes a record, court record. You go down to the courthouse and find out everything you want about somebody who's in probate. Everything. Because they got to list it all in there. But not in the trust. Trust don't have to worry about that. As I said, it's private, assets transfer, nobody knows anything about your business. Tax benefit. Again, it reduces taxes specifically on the real estate. Because I live in Prospect, Kentucky. Our house is just appreciating like crazy. And right now, if we were to die and not have that trust, the real estate taxes on that property would be crazy. They would be crazy, but not now because of the trust. It protects you from all that. And then the last thing, it controls the distribution. I think the wills and the trust both have that component in them where they will control the distribution of your assets. In other words, you get this, you get this, you get this. You know, kind of like Oprah. You get a car, you get a car, you get a car. Man, y'all tough. But if you do anything, I said the bare minimum is a will, because you don't want. I don't care what you got something that somebody gonna want, and you can determine who gets it with a will, and that's the bottom line. You know, you put in place their principles. I'm talking about additional assets, financial instruments to protect your financial situation, to improve your financial portfolio. What we need is life insurance. That's essential. Get your term life policy. Young as y'all are, you can get a term life policy, probably a $50,000 term life policy. Probably cost you, maybe $20 a month, maybe. I'd say that'd be stretching it, because y'all young, strapping, healthy men. Ain't like me. I'm standing up here right now with all these floaters going around in front of you in my eyes, and I got diabetes and heart disease, but I'm healthy. I ain't man. Rock and roll. See that? That's right. Football coach.
All right.
Football player. Okay, one more. Now, why these tools create a complete financial portfolio? I can't kind of go on all of that. Let's go into a little bit more detail. It's comprehensive protection. Means that's full protection. If you're gonna start working on your financial portfolio, you start putting these pieces in place. And without this, it's not complete. You want to make sure it's complete. As you progress, you want to add more of these instruments into your financial situation. Assets are distributed as you wish. It's a peace of mind. I'm telling you, I was worried about Wayne, because I said, I'm gonna die. He's gonna be left here alone. Oh man, what's gonna happen to him? I don't have to complain anymore, because I've talked to his sister. She lives in Texas. One of the things we're thinking about doing is taking our house when we die, let Wayne stay there, bring in some more special needs people. They pay rent to live there. It becomes what they call a group home, and we have somebody living there, and they making money off of the property. So that's one of the plans we got in place right now with his sister. She can do that, or she can sell it. If we die, say the house is worth $2 million when we die, then she can sell it and just split the assets with Wayne, and they go off and live happily ever after. But there's options that are available now because it's in the trust and they can liquidate it the way they want. But it helps to know that they'll have it no matter what, because we have the trust. So I sleep very well now. Very well.
All praise.
Last thing I talked about, wealth preservation. It preserves what you have in the state and the city and all these other people don't come in like vultures, taking all your assets. You are protected. Once again, I said earlier, when you go to probate, you can go downtown and find just go to the probate courts. I'd like to see all your probate records. Boom. You can look through everybody's probate record and find out what they're worth, what they got, and not have no privacy at all. But when you do a trust, security for further generations. Oh man, wow, maybe I should go. But that's pretty much for the next line. Life insurance, wills, and trusts, essential components of a financial plan. Protect the family, assets, and legacy. It's an encouragement to plan ahead. Now, like your budget, you want to plan ahead your full financial portfolio. Then you have, you start early to build security for yourself and your loved ones. Once you start doing this, I'm going to tell you, it gives you such a peace of mind to have all these things in place. Add it on top of your budgeting, you're making your money work for you. As you make your money work for you, then you want to use these financial instruments, as Joseph was talking about. As you put money aside, then you can look at, okay, let me get my life insurance policy. All right, put some money aside, now let me get my will together. Put some more money aside, let me go ahead, I got a house now, I got some kids, let me put it into a trust. If anybody got a house, I say you need a trust. You need a trust. Because when you die, that house, I don't care if it's even under $500,000, if you have a house, it's gonna go to probate. It will, unless if it's just your house, you and your wife, well, it'll pass on to her. But then when she passes on, guess what? Probate. That happened to me with my mom. We lived in a house on 535 Southwestern Parkway for 55 years. I told my mother, you need to put the house in a trust, or you add somebody to a mortgage, so we won't lose a house if something happens to you. This is how we think. Oh, y'all just trying to get my house. I looked and I said, baby, somebody's gonna get your house. The question is, you can decide who gets it at this point. Because if you have older members of your family, your mom, dad, whatever, they got a home, stuff, you need to make sure that is taken care of 5 years before they go into a nursing home. You need to explain to them, look, we need to put this in a trust, or add your name to the mortgage. All the siblings, everybody can be added. Add somebody to it so that asset won't be taken. Because when you go into a nursing home, guess what happens? They take it. That house I lived in, all the dreams, all that stuff, all gone. Nursing home took it.
The nursing home.
Oh yeah, yeah. Nursing home will take it. You cannot have an asset in being a nursing home for long-term care. They'll grab it and they'll sell it, and they don't care about you one iota. They will just take that asset from you, sell it, your dreams, your memories. They don't care about none of that. They want their money. Like I said, it's a cutthroat world. When you die, don't nobody care but the people who love you. The rest of the people out there are going to be looking to get your bones. Read Proverbs 24 again, please. Listen to these words.
Proverbs 24 and 27. Prepare thy work without.
Stop. Prepare thy work without. That's preparing your work before you get back into the house and all that other stuff like this. You prepare with the steps that they were talking about. Go ahead.
And make it fit for thyself in the field.
Stop. And make it fit for thyself. That means, as Joseph was talking about earlier, you got to be prepared. When you step into marriage, you want to be fit. You want to be fit to go into that next level, to that next place. Because if you aren't, ain't nobody going to want you. And if you get somebody and you ain't got nothing, they ain't gonna have nothing. So what nothing leaves what?
Nothing.
Nothing. I want somebody, look, my mother introduced me to my wife. That's how crazy this is. But she found me a doctor, and we have made a wonderful life together, even through my insanity. But you want somebody that wants something. We didn't get married, and she's 2 years older than me. We didn't get married till I was 32, she's 35. I saw these people get married young, didn't have nothing, and guess what? The marriages just blew up. Because why? Read it, started again at the beginning.
Prepare thy work without.
Because the work was not done before. You have to be able to have your stuff together before you.
And make it fit for thyself in the field. And afterwards build thine house.
And afterwards build thine house. It didn't say you just run in and y'all just gonna be woo. Love, like James said, faith without works is dead. But brothers, love without works is dead. All of this work is the essential part of this. The Bible also says, he who does not work doesn't what? Eat. We all got to understand that we got to do our part. And our part is being prepared. Do the work outside to be fit for the inside of our lives. Because when you walk up in that house, you want to be the man of that house. You want to be able to say, baby, here, this is my financial situation. No, I'm straight. Let me help you get straight. Let me guide you in a godly way. That's what you got to. My wife makes more money than I ever. $250,000 a year, okay? I ain't close to that. I do all right, but I control the household. She defers to me. Why? Because I have prepared the work without. So that she understands that I'm not going to do anything that's going to hurt our household. Like Obadiah said, she has an account, I have an account, we have a house account. Everybody has a certain percentage they got to put into this house account to pay, that's where all the bills are paid. Either one of us can do that. Most of the bills are automatic anyway. Just money in that account and they're all paid. But there's a system, there's a preparation. The work without must be done, brothers. No, we can't just keep running around like Joseph said, buying Air Force Ones and all. Those assets, man, I don't care. I buy my shoes off Temu. Hey, I love that they slogan, shop like a billionaire. I just finished all my Christmas shopping yesterday. I'm going on TV. I'm in bed last night just shopping. What are you doing? I said Christmas shopping. Well, we got to be smart with our money. He said we are the stewards. And to be a good steward, you what? You're fruitful. You're fruitful. You see, as I close up here, I gave everybody 3 pieces of paper, actually 4, or 2 other pieces of paper there. I am now the vice chair on the board of directors of a lending institution here in the city. We're called NOR Lending CDFI. CDFI means Community Development Financial Institution. And what we're going to be doing is we're standing in the gap between banks, which we find, so hard for us black folk, but marginalized communities get loans through, and then the payday people who are basically loan sharks. I don't know if you've seen the usury fees on some of that stuff. It's crazy. The interest is more than twice the loan. So what we're doing with Noir is we're standing in the gap. We are going to be offering credit building loans to begin with, and then when we get our complete certification, we are licensed now, so we can license to do those loans. When we get our certification, then we're going to be doing a lot more in the marginalized community to provide wealth management and wealth creation tools, because we want to make our people whole. We're right located in the NIA Center, and I'm going to be speaking on that. You got his press release. I'm going to be speaking on the impact this is going to have financially it seems that God is moving you to a financial mindset. Wealth, wisdom and wealth with you, and then all of a sudden this guy asked me to be on the board of this lending institution, and we are going to provide an instrument for black folk to build generational wealth. That's my goal, is to get that education. Right there at the Mia Center, you've got what? You got the new hospital that's making an impact on health. You got the Opportunity Center for Goodwill that's making an impact in the forms of entrepreneurship. And now we are going to make an impact in the lives of people financially. And I told the guys, we had a meeting last week. I said, what you're doing is you're building men. Building men. A man can lead his household when he has a good credit score. He can lead his household when he can go to an institution and get a loan for a home. A man will stand taller with that knowledge. Don't get me wrong, that ain't all that you need to be a man, but that's a component when you can say, I can take care of mine. I don't need to, hoe around. That's not where my manhood lies. My manhood lies in being responsible, being resilient, and being what's it called? I just lost the word. Model for my family. Our little girls learn what men are from their fathers. Our little boys learn what men is from their fathers. Once you have that responsibility, and you can take that responsibility, hey, that's one big block in that standing up to be a man. I truly believe. Next slide, and if you had any questions, concepts, we can discuss.